Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, pleasure to be back on the show.
John, why has FPX nickel pulled back?
Well, in early March, there was news that a major Chinese stainless steel producer called Tsingshan was ramping up its Indonesian operations and had indicated it would deliver 100,000 tons of matte nickel to Chinese battery makers sometime later this year. And this sudden new, prediction of new Indonesian supply by the creator of the nickel pig iron form of making stainless steel, that gave the market a shock, and the nickel price retreated sharply. It had been over $8 a pound, and now it's back to sort of $7.25 a pound. And that took some of the steam out of the nickel market, and all of these nickel juniors that are going to, produce nickel sometime in the distant future. So FPX nickel, which had been as high as 94 cents earlier this year, was back into the sort of 70 to 75 cents. But the recent retreat, that is due to the company doing a bought deal, which was first for $10 million at 65 cents, and then upsized to $14 million the next day. And there's an over-allotment option which could raise another $2 million. And combined with the $5 million plus that they already have in the treasury, that would give them over $20 million. Now, this financing, it's a bought deal, means they're guaranteed the $14 million. The brokerage firms are on the hook for that, whether or not they can find buyers for the stock. But it's also one of those short offering memorandum financings where it will be free trading instantly. And so this will unfold over the next couple of weeks. They just filed the prospectus to support this offering. And of course, you have traders in there pre-selling this, clipping their pennies, saying, oh, we can sell it for 70 cents and make a nickel on it. Oh, now it's down to 67 cents. So it's basically come down to the sort of 65, 67 cents level, where in my view, it represents an exceptional opportunity for people who want exposure to one of the best nickel stories out there. Now, the PEA that they published last year, and we last talked about FPX nickel in early November, this suggests that 775 base case nickel price, this stock will end up being a $5 to $10 stock if it works its way through the PFS with the PEA assumptions intact. And for my readers, this is one of my top favorites, and I think the stock, if you use proper rational valuation method, a fair value for this stock at this stage, working on a PFS that is now funded, would be in the $2 to $2.50 range. So it's one of my top picks right now, and the weakness right now is actually going to provide strength for the company, because with the $20 million plus in the treasury, there will be no need to finance until 2023 after they've completed this pre-feasibility study. Now, you might say, okay, but when you're doing the pre-feasibility study, what is going to change? We already know the outlines of the economic study done by the PEA. This is actually the value trough where the stock trades less than it should trade. So why should we care about this? Well, FPX nickel has three value vectors at work that are quite unusual for this company. And you don't usually find this in the junior resource sector where they are working on an advanced project. The first vector is that from this financing, they'll take $1 million and do a 3,000 meter drill program on the Van target, which is to the north of the Baptiste target on which the PEA is based. And they'll drill about 10 300 meter angled holes into what amounts to a 500 to 700 million ton footprint. In other words, this is very similar mineralization at surface as there is at the Baptiste deposit. which is characterized by the complete absence of sulfides. It's a coarse-grained awaroite mineral, which is a natural stainless steel. And what makes this project so special is that a simple flow sheet of crushing, magnetic separation, and then flotation produces a 65% ferro-nickel concentrate that can be fed directly into the stainless steel mills. And the mine life for the PEA, 120,000 ton per day, is like 35, 40 years, with all the value residing in the first 20 years, which would mine about 900 million tons. So you ask yourself, well, what do they need another deposit like that for on the same property? And because you already have more than, what works in the net present value calculation of the discounted cash flow model. Well, there is no reason this project could not be bisected into two projects with two major open pit mines. Furthermore, the Van target, the surface values have run up to 0.16% Davis tube recoverable nickel compared to the sort of 0.12% level for the Baptiste project. So there is a potential that there's a 30% or so grade boost for the Van target, in which case they might even end up making that the primary focus. This drill program, which they'll begin this summer, they'll know pretty quickly from just looking at the core, analyzing it, and seeing the grain size distribution, whether or not they have a resource that they can, maybe need to drill a few more holes to increase the density, and come out with a 43-101 resource estimate in Q1 of 2021. And that would have the potential to boost the value of this company by 50% to 100%. So it's a discovery play in the midst of a feasibility demonstrating play, whose value is additive, not simply a replacement of the existing value. The second vector is that in early 2020, they put out news that work done at Sherritt on the ferro-nickel concentrate to see what it takes to make nickel sulfate in the 4N, 5N, in other words, 4 nines, 5 nines category, which is the grade needed for the battery sector. There were some promising indications that this might work. So there are ongoing studies to assess what it would take to convert this ferro-nickel concentrate into nickel sulfate. And this is of potentially very big importance to groups like Tesla, which are talking about securing a long-term supply of nickel for their batteries. If they can demonstrate sometime later this year that it will make sense to convert this ferro-nickel concentrate that's ordinarily destined for the stainless steel mills into nickel sulfate, this will attract an entirely new audience. And the third vector are the continuing studies on the carbon sequestration properties of the tailings, the magnesium-rich tailings that the Baptiste mine would generate. And so far, earlier this year, we saw a report of a study done at the University of British Columbia, which shows that this actually works. It does pack away carbon. So if they can demonstrate on a scaled-up basis that, yes, the tailings will actually pack away carbon, achieve carbon capture, that pushes this project closer to carbon neutrality, which is the holy grail in the mining industry and quite hard to do because mining is very energy intensive, and unless you're sitting next to a hydroelectricity power plant where all your power comes from hydro and therefore is clean and carbon free, companies have a tough time achieving carbon neutrality. So this project could end up benefiting from news on these fronts that Van is very similar and perhaps better to the Baptiste zone. That's already the basis for a valuation that should be in the 2 to 250 range right now based on about 200 million shares fully diluted. The possibility that we get the battery crowd really embracing this project because nickel sulfate can be made directly from the main mine product, the ferro-nickel concentrate. And the third thing is the ESG crowd looking at this and saying, wow, here's a large-scale future nickel mine that could end up being carbon neutral and therefore should be prioritized for development. So the stock is weak right now because this financing is underway, but this financing strengthens the company. There'll be no need for more financings until 2023. And at that point, when you've reduced the uncertainty, PEA uncertainty from 35% down to the 20-25% range for a pre-feasibility study, that's when the project will end up on the radar of groups like Rio Tinto, which itself has no nickel production and is eager to be part of this clean energy trend and has a lot of penance to do with its terrible handling of the Yukon Gorge fiasco in the Pilbara.
We'll have more with John Kaiser right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with John Kaiser. John, SK Mining reported good news, but the stock still dropped. What's going on?
Well, first of all, the good news that they reported today was that Kirkland Lake had agreed to swap its 20% stake in the Siblulu portion of the SK Creek project in the Golden Triangle for a 2% NSR, of which SK Mining can buy 1% for $3 million. So this cleans up the ownership of this land package. The southern part, called Corey, had been owned 100%. The northern part was 80-20 with Kirkland Lake. And this has been a bit of a headache because Kirkland Lake is not the operator. Kirkland Lake doesn't really want to participate in this. And it makes a lot of sense to consolidate 100% ownership, and with only a 1% NSR left after paying $3 million to buy out the first 1%, the company has managed to secure right of first refusal. So if Kirkland Lake ever wants to sell it to anybody, SK Mining would be able to buy that entire NSR so that this whole project is royalty free. Now, this project is, in my view, will be the most exciting exploration play in the Golden Triangle this summer. It covers 85% of the prospective VMS formation that hosts the SK Creek deposit. The 15% that SK Mining does not own is the northern portion that is now owned 100% by Skeena Resources after the deal they did with Barrick last year to get rid of Barrick's back and right. The 21B zone, which was the richest VMS gold and silver enriched deposit in the world, it produced 3.5 million ounces gold and 180 million ounces silver from a mere 2.5 million tons, called the 21B zone, which sits in the contact mudstone horizon above a rhyolite footwall, where the ounces that Barrick left behind are now the focus of a feasibility study being done by Skeena, and beneath a basalt cover. Now, Skeena has been busy finding, once it wasn't worried about the back end, it has been busy finding that the lower mudstone unit, which is older than the contact mudstone unit that hosts the 21B zone, they've been intersecting gold and silver enrichment in quite a few places where these fluids have passed through this material, and they've even found what they call the even lower mudstone unit, which would be an older unit that is also mineralized. But also, quite interestingly, they've recently reported that they're finding gold-silver mineralization within the hanging wall basalt, which is an interesting development because it revised the debate as to whether the 21B zone formed first as a seabed VMS deposit and was later enriched by a gold-silver pulse for which it served as a major sponge and soaked it up, which made it such a special deposit, or whether the base metals and the precious metals were both part of the same depositional event. And from SK Mining's perspective, you really want to preserve the latter scenario because if it was the first kind, then wherever it was that these hydrothermal fluids came up, what caused them to come up, actually encountering a pre-existing VMS deposit would be a coincidence. But if they were all part of the same, if the precious and base metals are all part of the same hydrothermal event, then you are likely to find more. And SK Mining has a war chest of $14 million to go into this property, 25 kilometers of strike. They've done a lot of work to sort out the geometry, although over $40 million has been spent since SK Creek was discovered back in 1989-90. This is the first time that a totally systematic approach has been done, and it all came about in late 2019 when Mac Balcom recruited Quinton Henney, Thomas Monarchy, and John DeDecker to do a major rethink of this project. And the focus shifted last year to the TV and Jeff area, and these were zones that were discovered by past explorers, but they couldn't really sort out where the mineralization went, so not much was done. The company has gotten a lot of mileage from drilling more holes, fanning more holes in these locations, and demonstrating, yes, there are silver and gold-rich fluids that came through this mudstone unit. Now, the big missing piece at the SK Creek project is where is the contact mudstone unit located, and they believe it's to the east, and they've done geophysics that suggest where they need to look, but they still need to find where this lower mudstone unit is located and then track the fluid flow through the stratigraphy, up stratigraphy into these targets and demonstrate that we have a 21B zone on the line. Now, the reason the stock is likely weakening is because sometime in the next few weeks, that $14 million financing done in December, 90-cent units for the hard dollars, $1.25 units for the flow-through dollars. It comes free trading. And as usual, we are probably seeing pre-selling of this financing so that people can take advantage of the strong valuation, the profit there, and then ride the warrant for free. So this is creating temporary pressure on the stock, and they are, of course, still 3 months away from starting exploration in the Golden Triangle, which really begins in July, and it'll be late August before we have any assay confirmation that they have latched into a 21B zone, which makes the current valuation look cheap. But at the moment, because we don't have the actual 21B zone discovery yet, the $400 to $450 million implied value, even after increasing it to 100%, that is what you would call ahead of the results. So the stock has no particular reason to head higher in the interim until there is new information generated by the drill bit to tell us that, yes, we are now properly in the S-curve territory of an emerging world-class discovery that if you found another 21B zone today, it would be worth Canadian $4 billion, and we're talking a $20 stock price for SK Mining if it doesn't have to do too much dilution to push the project all the way to a feasibility production decision. So the stock is down not because they put out great news today, but mainly because the general resource sector is in a pullback mode right now. In fact, yesterday we had the lowest value and volume traded day for resource listing on TSX Venture so far this year. It makes no sense. The clean energy movement is going to put pressure on key metals, base metals related to the clean energy electric vehicle build out. The $1.9 trillion COVID recovery bill will help get the U.S. economy back on track. And this $3 trillion bill they're talking about, which is going to be earmarked for actual capital spending, infrastructure renewal, that has the potential to introduce the inflation that will get the gold bugs all excited again. And so even though gold here at 1,700 is an excellent price, the market remains obsessed with the trend in the gold price. If gold would stabilize or even better start trending higher, this funk would disappear. But it really perplexes me that the market is selling off the resource sector stocks in the face of what's going to be a massive infrastructure spending binge that can only drive metal prices higher after a decade of the big producers not doing much after going on the spending acquisition binge in the wake of the China super cycle. So this pullback for SK Mining will put it back into a more reasonable pricing ahead of the Golden Triangle drilling season, which I think will be one of the most exciting that we have seen in a long time in this area.
We'll have more with John Kaiser right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with John Kaiser. John, whatever happened to P2 Gold and its Silver Reef project in northern BC?
Well, I introduced P2 Gold last June when the company was called Central Timmins Exploration. This had been a company that had some properties on the fringes of the Timmins, the gold district in the Abitibi belt of Ontario. They've done a 6-for-1 rollback. And Ken McNaughton and Joe Ofsenek, the exploration VP and CEO of Pretium at the time, they were in the process of leaving Pretium and its Brucejack mine to start out fresh with a new exploration vehicle. And they bought a financing at 10 cents post rollback, a couple million shares each. And this became their new vehicle, and the first acquisition they did was an option on the Silver Reef project, which is about 50, 70 kilometers north of Hazelton. It's outside the Golden Triangle, but it's still way up there in the northern part of British Columbia. And this is a silver, zinc, lead, high-grade carbonate replacement style system that some prospectors had generated. And these guys had familiarity with this type of system. They managed to spend $900,000 last year drilling the main zone. The results weren't quite what they had hoped for, but during that exploration program, they did mapping and prospecting on the property, identified a new similar style zone, what they now call the Northwest Zone, and they did a magnetic survey which revealed that the main zone is associated with these magnetic linears and that there are several parallel ones, one of which lines up with the northwest zone, which they now call the Northwest Trend Zone. So their plan is to go in there in July as soon as possible and start drilling so that they know by late August, when they would hope to have the first assays, whether or not they have a winner in this project. And they've done a series of very aggressive, expensive deals. They're relatively easy in the first couple of years, but in the third year, the spending and money and share issuance requirements start to escalate. The other two properties they optioned is the BAM project from Charlie Gregg. It's sort of east and southeast of the Galore Creek and Shaft Creek porphyry deposits in the Golden Triangle. They believe this has potential to have another Galore Creek style system. Work they did last summer generated the Monarch Zone, so they hope to go in there and drill some holes to find out whether or not they indeed have a porphyry system, preferably one with Galore Creek type copper gold grades rather than the lower copper grades of the Shaft Creek deposit. And Todd Creek, it's southeast of the Bruce Jack project. It's actually owned by ArcWest Exploration, which is a prospect generator group. And that's also a fairly expensive deal. They, through their experience with the Bruce Jack project, have some theories that this property also could have similar potential to the Valley of the Kings, and they will be going in there this summer in an effort to assess is the geological context really what we're looking for, or is this an illusion? So they want to be able to make decisions by the end of this exploration season on the Golden Triangle projects and the Silver Reef project to the south, especially given the seasonal constraints, because even though they have, until mid-2022 before the really onerous terms kick in, you don't get much done in this northern Golden Triangle region beyond October and before June. So they need to do a lot of work in that area. But the new development that is intriguing me and is the recent announcement in late February that they were going to acquire 100% of the Gabbs project, which is in Nevada in the Walker Lane area. And the Gabbs project is not your usual low sulfidation epithermal gold silver system that one associates with the Walker Lane. It's a porphyry copper gold system, and unlike the ones in Yarrington, which are more of the ordinary calc alkaline style where you have copper, molybdenum, and maybe some gold, these ones have a gold enrichment, and they're more in this what they call high K calc alkaline porphyry systems, similar to projects like Red Chris that Newcrest is very interested in, became partners with Imperial Metal, and the North Saddle project of GT Gold, which Newmont is now acquiring in a bid valued at about $450 million. Now, the Gabbs project emerged in the 70s. It's had a lot of work done on it. Nearly 500 holes have been drilled, but only about 320 of these are old enough that they don't meet the QC requirements to support a 43-101 resource estimate. It sits just to the north of the Paradise Peak mine, which FMC developed in the 80s and shut down in the early 90s. That was a high sulfidation gold-silver system. It ended up selling it to another company called Arametco, which ended up bankrupt. And that big property now is one of those reclamation problems owned by the government. So it's just south of the Gabbs project, but it's much younger system, only 22 million year old, whereas what we're dealing here are 60 to 100 million year old copper gold porphyry systems. And the two deposits, the main ones, the Lucky Strike and the Sullivan, They're both fairly shallow. They've received all the work in the past because people can see these are open pitable. They have a resource of about 73 million tons of oxide and sulfide mineralization that averages 0.53 gram per ton gold and 0.26% copper. And they are acquiring this from Waterton, which had purchased it from an AIM-listed company called Galileo, which in turn had absorbed a Canadian company that never quite made it public through an IPO during the early part of the last bear market decade. And they're paying $5 million US up front, 15 million shares, and then they need to do another $5 million payment within 2 years or the earlier completion of a PEA. So they're in the midst now of trying to raise 16 million Canadian through a private placement of 32 million shares at 50 cents. They're doing it on the backs of their reputation. They think that the past focus on just the shallow aspect of the GABS project has understated the potential. They think that there is potential for 150 million tons open pitable, similar grade. Holes were generally less than 100 meters, stopped in mineralization. So part of their plan over the next 2 years is to do infill drilling to upgrade the resource and support a PEA, but to also chase these zones down plunge to see if the mineralization is still there and perhaps even gets better. But what the geologically interesting aspect of the GABS project is that an IP survey has shown that 450 meter depth, which has not been tested by drilling, there is an IP chargeability high, which is usually associated with sulfides. And these deposits, they are like floaters. They're sills within this gabbroic intrusive that don't really hang together. The depositional geometry has never been sorted out for this project. So what Ken and Joe are tackling here is also a major rethink of this entire system. And sitting above this IP target is a smaller system called Gold Ledge. It's also a copper gold porphyry zone, and they think that perhaps at depth it all ties together. And the speculative question is, as is often the case with these high K calc alkaline porphyry systems, does the grade of the copper and the gold improve the deeper you go into the system? So the work coming up in the next year will include some deep holes to assess what's going on down there at the 400 to 500 meter depth. That's too deep to be open pitable, so we will need to see grades that support block caving. But at the very minimum, they see this as an optionality play that probably works at the current gold and copper prices, would certainly benefit from a stronger gold price and a stronger copper price. And this is a project that they can work all season long. So with P2 Gold, we've got two major sort of value creation tracks. One is testing these northern BC projects this summer to see if they're worth keeping because they have significant discoveries. And the other is to advance this GABS copper gold story, both as a feasibility demonstration play with a PEA expected by early 2023, and with discovery potential linked to the deeper potential of this project.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.